For this video, we're going to take a look at the recording of intangible assets. And let's take a look at the question. So this question starts with a company called IP. They have a December 31st, 2008 year end, and they reported the following assets. They have patent number 1, copyright number 1. It's already been amortized. They've got goodwill, and this is the total intangible asset. Patent number 1, we're told, was acquired on January 1st, 2007 with a useful life of 10 years. Copyright number 1 was acquired on January 1st, 2004, has a useful life of 10 years. And these are the following transactions that affected the intangibles in 2009. And what we're asked to do is record the journal entries for each of the above transactions. And in Part B, we're asked to provide adjusting entry, which means that we need to amortize these assets. And of course, Part C says we need to show the intangible section on the balance sheet. So the first entry is, the first transaction is on January 1st. They paid $22,500 in legal costs to successfully defend patent 1. So the fact that they're successfully defending patent 1 against infringement means that we could capitalize the legal costs as part of the cost of the asset. Because part of it is by defending it from patent infringement, you're adding value to the asset. And because you can substantiate future economic benefit on that asset, we need to capitalize that legal cost to the patent. And it says here, determine the revised amortization of patent will be 9812. So that's going to be our revised amortization on the patent. So let's do that one first. So on January 1st, given the fact that the legal cost was successful and we're able to defend against patent infringement, we're going to debit the patent number 1 and credit cash for $22,500. Obviously, if the legal cost was not successful, then we would expense that, right? We would expense that as a regular legal expense and part of operating expenses. Now, on July 1st, we develop a new product. We incurred $220,000 in research and $60,000 in development costs. Patent 2 was generated on July 1st, and the useful life equals to the legal life of 20. Now, there's a couple of interesting costs that they've incurred. There's research and there's development cost. Normally, research is expensed. Under our standard, research costs are expensed. Development costs can be capitalized if it meets a certain condition. And one of the conditions, and there's about 7 conditions, but one of them is the fact that we were able to produce a patent out of it, and we're able to estimate the useful life of that patent. So therefore, we could capitalize that $60,000. So on July 1st, the entry is, we're going to debit research expense for the $220,000. We're going to credit cash for $220,000. And then we can capitalize the second patent, so patent number 2, $60,000, credit cash $60,000. Now, on September 1st, what happened? September 1st, we paid $11,000 to an Olympic rower to appear on a commercial, and commercial will be aired in September. And again, commercial advertisement expenses, any cost incurred in advertising, can never be capitalized as an asset because it's difficult to measure the future economic benefits. It doesn't qualify as an asset. So therefore, all advertisement expenses has to be expensed. So we're going to debit advertising expense, $11,000, credit cash, $11,000. Now, on October 1st, they acquired a second copyright for $16,000. They already bought the first one. They bought the second one, and it has a useful life of 5 years. So we're going to debit October 1st, debit copyright. Number 2, $16,000, credit cash, $16,000. And we're given the period of amortization that's going to help us calculate the adjusting entry in Part B. So we're going to come and revisit that. December 31st, we determined the recoverable amount of goodwill to be $175. So take a look. The carrying value is $120. The recoverable amount is $175. So we do have an impairment loss. Okay? So we're going to debit on December 31st. We're going to debit impairment loss, which is the difference between 175 and the carrying value of 210, which is 35,000, and we're going to credit goodwill. Okay, so these are the journal entries of the 2009 transactions for this company. Now, Part B says, what are the adjusting entry? The adjusting entry would only be related to the amortization, right? So December 31st, the first adjusting entry is the patent number 1. So patent number 1, we're told in the question that the amortization is $9,812. So debit amortization expense, and this is given to us, so we don't have to calculate. Credit accumulated amortization 9812. Now for patent number 2, we need to calculate. Patent number 2, we paid $60,000, right? So $60,000, and we're told that the useful life is 20 years. And when did we do this? It was July 1st. So July 1st, it's 6 over 12 months. Okay, because it was July 1st. Right? That's a very important point. So we need to debit amortization expense again and credit accumulated amortization patent number 2. This is patent number 1. And that is for $1,500. Next, we've got copyright number 1. And copyright number 1 is $48,000 from the question, and we're told that the copyright has a 10-year useful life, and that gives us $4,800. So the entry is debit amortization expense again, and credit accumulated amortization copyright number 1. And then finally, we've got copyright number 2. And copyright number 2 came about by October 1st purchased. So again, we need to calculate 16,000 divided by, this time it's 5 years. And because it's an October 1st purchase, how many months is that? 3 months, right? So 3 over 12 to give us $800. So the entry again is debit amortization expense, credit accumulated amortization copyright number 2. $800. Now, we're asked to provide a balance sheet section for the intangible asset, so we can do that. Again, part of it is a presentation and disclosure. So part C, we're going to name the company IP Corporation. And this is a partial balance sheet. And this is as at December 31st, 2009. So under intangible asset section, which is part of long-term asset, first we're going to list patent. And the patents, there were several patents, right? We had a $70,000 patent. That's patent number 1. Then we had $22,500 to defend it, plus patent number 2. So we've got $152,500. We've got accumulated amortization for the patent. Okay, so we know that patent number 1, we amortized. So first we had $14,000 was the original beginning balance, plus we got $9,812 for patent number 1 and $1,500 for patent number 2. So we've got $25,312. So net book value is $127,188. So this is patent number 1. This is patent number 2. Next, we've got copyright. Copyrights, there were several copyrights. So copyright number 1 was $48,000. And remember, we bought copyright number 2 on October 1st. So now we need to add $16,000. The total copyright will be $64,000. Less accumulated amortization for the copyright. And again, copyright number 1 had a beginning balance of $28,800 plus the $4,800 for copyright number 1 and $800 for copyright number 2. So that gives us $34,400. So net book value is $29,600. Then we have goodwill. And goodwill, we had $210,000. Then we had an impairment of $35,000. If you remember, that's $175,000. The total intangible is $331,788. Okay? Thank you.